Hello and welcome to this deep dive into Zillow, the real estate technology company. We're doing it with the Davis Rea Investment team. I'm Mark Bunting, the publisher and host of Uncommon Sense Investor. Thanks a lot for joining us. Joining me now is John O'Connell, the chairman and CEO of Davis Rea. Good to see you, sir.
Nice to be here again, Mark.
We also have senior analyst Matthew Aspro and associate portfolio manager JC O'Connell. Gentlemen, thanks for joining us.
Thanks for having us.
Thank you.
So, John, let's start with you. You've talked before about Davis Rea liking to invest thematically in disruptive companies with large addressable markets. So when you're doing a deep dive on a potential investment, in this case, Zillow, how does the investment team go about it, number one? And number two, what are you looking for? What are you trying to discover?
So first, we're looking for products and services that can serve large markets, like you said, preferably globally, or they could certainly scale globally, and areas where information technology, artificial intelligence, data science really start to explore into new areas of industry and commerce. So what we do is we break it down by looking initially at the size of the market. So our chief strategist or chief economist, John Johnson, starts off by looking at the size of the market. How large is it as a component of GDP? What are the drivers of gross national product, and how important is that component of that industry in the overall global economy or the market economy? Like, let's say the United States economy, for example. I spend most of my time reading and thinking about how technology is shaping and affecting business strategy, how businesses are investing their cash flows, developing new opportunity sets. And then we have the young guys drilling down, doing the financial analysis. That's what JC and Matthew do. And doing the financial analysis and trying to piece it all together and coming up with a discounted cash flow analysis, for example, in terms of what we think the company's worth, what it could be worth in the longer term, and then making some decisions whether we want to buy it, whether we want to just dismiss it completely, or we want to keep watching it, as in the case of the Zillow, for an entry point when we think it represents really compelling value. So we don't always come to a conclusion that we want to own something. Sometimes we come to the conclusion that why we don't want to own something, or we do want to own it, but not at the present price.
Right.
That's our overall arching thematic.
And we'll get some more insight from Matthew and JC in just a moment into Zillow. So this company, disrupting residential real estate, you mentioned data. They've got a ton of it. They want to be a one-stop shop for people buying and selling homes, basically. So when you look at the model, what's the first thing that strikes you that's compelling?
We really looked at Zillow initially, and the company's been around for pretty close to 15 years now. And it's been basically an advertising business for real estate. And we sort of think of the way you should be thinking about Zillow is it's the Google for real estate. In real estate business, it's $2.2 trillion, so around 10% of the GDP in the United States. It's a hugely important transaction for people. It's very expensive. There's about 5.5 to 6 million transactions a year. And there's a lot of different moving parts within that industry. There's real estate commissions, there's legal fees, there's title insurance, there's mortgage financing, there's house insurance, for example. So there's a whole bunch of different pieces. So it's a huge component of the market. And we think that basically Zillow is servicing that whole marketplace. They've been around, they've been collecting data for years. They know all kinds of information on about 135 million homes. So it's a big, huge data science company with a lot of compelling opportunities associated with it, that's for sure.
Matthew, let's bring you in here, and maybe you could flesh out the business model that John was talking about there. Sort of take us through it from a broad perspective, if you could.
So Zillow offers a single platform for people who want to buy or sell, rent, finance, or even just browse in the real estate market. But more importantly, they service the real estate professionals who cater to each of those submarkets. These real estate professionals will then pay for advertisement and then drive the company's revenue. So Zillow is broken down into 3 different operating segments. Their first and largest is called their Internet Media and Technology, otherwise known as their IMT. And this is their main advertising segment. Their second is their mortgages business, which is responsible for refinancing as well as new loans on houses. And lastly, and their newest business segment is called their homes business. And this is responsible for buying, renovating, as well as selling physical homes.
So let's bring in JC to pick up on that. So that's Zillow offers the buying and selling aspect of homes for the company. They just raised close to $500 million to help finance that. So JC, break down that part of the business for Zillow and what it's doing in terms of using data to make the user experience better.
The Zillow Home segment is really a strategic asset that brings Zillow down closer to the consumer by offering a more comprehensive array of services. The primary business within the segment is called Zillow Offers, as you mentioned. And effectively, what Zillow Offers does is buy homes directly from sellers, renovates them, and prepares them for resale. And this is what's known in the industry as the iBuyer model. And simply put, Zillow's iBuyer model uses computer-generated analysis to make offers on homes. They have machine learning applications that aggregate really broad sets of housing market data, which get smarter and more efficient as the data pool grows alongside the number of transactions. And that allows Zillow to be able to make accurate and competitive offers in a very short amount of time. When you look at it, one of the keys to success here is Zillow's access to information, which really is second to none in the real estate industry. Zillow right now has data on just over 135 million homes, which covers nearly every registered American household. And it's their ability to effectively interpret and monetize this data that gives them a unique advantage over some of the more traditional and regionalized real estate players in the industry. Right now, Zillow's building out a program called Zillow 360, and this is going to enable customers to sell their homes directly to Zillow Offers, buy their next home through a Zillow Premier agent, and finance that home with a Zillow Home Loan. Once that process is done, the consumer can then will use Zillow's closing services to finalize the transaction, and they'll ultimately receive a discount for bundling all of these services together into a package. And the beauty of the integration is really evident in the scaling power that it brings to the business as a whole. If you look at their most recent quarter, traffic to Zillow's apps and websites saw a total of around 2.8 billion visits in just 3 months. And it's the sheer volume of visitors to their digital properties that means they can really spread their customer acquisition costs over a broader set of services, which then allows them to pass along cost savings to consumers and generate returns for shareholders. You know, in a very real sense, Zillow is transforming itself into a sort of comprehensive and tech-enabled market maker for the housing market, and they're sort of among the very new entrants here.
JC, maybe you could just explain a little bit further. What's the advantage of the iBuying process versus the traditional approach of buying and selling homes right now?
The true benefits of using Zillow services lie in the simplicity, the efficiency, and the transparency that the platform adds to the home transaction process. If you look at it, sellers receive nearly instant cash offers from Zillow. Buyers can connect directly with an agent through a platform to make offers in a similarly quick and flexible fashion. And access to financing and closing services further streamlines the process. And unlike in the traditional for sale by owner transaction, when a home is sold on Zillow Offers, it's never officially listed, which avoids sellers having to stage their homes for showings and open houses. And it adds meaningful efficiency in what's historically been a very illiquid market.
I don't think we can really emphasize it enough, Mark, that it's a service that's offering incredible flexibility for both the buyer and the seller. And they're able to match the selling date. They could sell their house and get cash the very next day, theoretically. So it's really taking a lot of friction out of the system, making it incredibly efficient because of all their data information. It's really quite amazing.
Now, Matt, you touched on so-called IMT, Internet Media Technology. That is the legacy business of Zillow. It's the real cash cow. And John's alluded to Google, a comparison to Google. It is the #1 real estate site in the United States. And you've made mention to comparisons to Google and Facebook. So can you compare and contrast? How is Zillow like those two behemoth companies?
So there's no doubt that Zillow's IMT segment is their bread and butter. It was only responsible for approximately less than 50% of their revenue, but it was the main leader to Zillow's bottom line in the past few years. And I think to draw parallels to Google and Facebook, Zillow operates as a search engine for the real estate market, and it drives traffic to their platform. Their platform then attracts real estate agents and other professionals who see a value add and want to advertise on this platform, and in turn drives advertising revenue, which has a substantial margin. And that is very similar to both Facebook and Google.
Matt, give us a bit of an idea, flesh it out a little bit further in terms of the way we ultimately started thinking about how to value this business.
When we want to value this business, we try and think of what is the total amount of commissions that real estate agents and other providers earn in a given year. So if we think that there is approximately 5 million homes sold every single year in the United States, and the average selling price is $350,000, and a real estate agent will take both sides of that, which is 3% per side and total 6%, we come to an approximate number of, let's say, $110 billion. So the real estate agent will want to give a portion of their earnings to Zillow in order to gain more business for themselves. And this is something that's been a proven business model for Zillow, and it's something that they want to expand to as many agents as possible. So that's how we think about the addressable market for Zillow. And then in terms of valuing it, we want to compare it to the earnings multiples of Facebook and Google, which is something that we did in our analysis.
Earnings for Zillow came out a while ago, the quarterly earnings. What did you make of them? And what are the growth prospects? Because we do know that the housing market in the U.S. is slowing down a little bit right now.
One of the things we like about this market is that even though the housing market will go through its cyclical swings, Zillow's growing so rapidly and people are adopting the service so quickly that we think that its growth rate last quarter was around 73% year over year growth numbers in their advertising. It'll be able to grind through and sort of grow faster than the market in general. And so that even if we do go through a cyclical slowdown, it shouldn't really upset the apple cart very much. And the other thing we like about it, I mentioned flywheel effects earlier on. You know, they're moving in the iBuying business and the home buying business. Their mortgage business grew really, really quickly. We're excited about the other opportunities that they could actually potentially move into. For example, they could get into the home renovation business. They could be selling advertising to a whole more larger set of verticals that they could be operating to. They theoretically could get into the home insurance business, for example. They could go around and be aggregating in certain marketplaces plumbers and repair people and whatnot. We think that Zillow can keep moving into all those other kinds of verticals. And so we think there's a whole suite of things that can really drive revenue a lot further once they sort of nail down in a very controlled manner the existing business that they're working on right now, which is making that home transaction business a lot more efficient.
JC, picking up on that, even with the slowing U.S. housing market, even if interest rates rise, can Zillow's continuing push into digital and these other types of possible businesses John is alluding to, can that sort of overcome a decelerating housing market and higher rates?
I think that Zillow's business model provides customers with a lot of attractive value propositions that should continue to drive growth regardless of where we are in the cycle. And you have to remember that Zillow's share of home transactions still accounts for a very small portion of aggregate home transaction volumes in North America. And so if Zillow continues to execute well and gain market share like they have been, that can serve as an offset to the otherwise negative effects of a moderating housing market. In a potential housing market downturn, I think there's the potential for you to see housing transaction volumes on the Zillow platform actually increase. Sellers are going to be looking for liquidity to quickly sell their homes for cash. And Zillow has the flexibility to reset their offer pricing dynamically and according to what the current market environment is. And it really is like a stock exchange or any sort of active market. And I think if you're seeing that, you might also see some opportunistic buyers coming in to look for cheaper bargains. This is something that we haven't seen play out, but I do think it's a possibility looking forward.
As we continue to drill down here on Zillow, I know people watching are wondering, okay, this is all great information, but do I want to own this stock? So what are the catalysts for Zillow? Does Davis Rea want to own it here? And if not, what do you need to see in the next few quarters to make a determination?
There's no doubt that Zillow's user base and their addressable market is enormous. And I think right now there's a large percentage of real estate agents who still canvass door to door And maybe a lot of these people haven't realized the value add proposition of advertising on Zillow's platform. So we'll be likely hoping to see a lot more adoption from real estate agents and other service providers in the real estate professional industry who will be using Zillow to advertise. Secondly, Zillow is consistently adding new monetization streams. So for example, they've introduced something called Flex for their real estate agents. And this is a platform in which real estate agents will pay a percentage of their commission instead of a fixed cost like the traditional Zillow model. So not only does this reduce the barriers of entry for a real estate agent, it also allows Zillow to capture a larger percentage of the commission pool. And lastly, and most importantly in terms of catalyst, is, as JC alluded to earlier, is the changing in demographic of home buyers. So as these home buyers transition into the much more technologically enabled age group, they will most likely lean toward using Zillow as their platform. And in general, people are trusting technology more and more, and they're moving up the value chain with their utilization of technology. And we've seen this with the use of Zillow even now, how people are trusting technology to make the largest transactions of their lives. And in terms of, do we want to let this story play out some more? I think in the long run, any company that removes friction for both the buyers and sellers, or the consumers and providers in an industry, is a profitable business model in the long run. But I think in the short term, because Zillow is such a new business, we want to be patient and see if there's any political headwinds that will come forth in the next few years, as this is so new and real estate agents hold such a large power over the entire industry.
JC, collectively, we talked about a lot, when we're analyzing companies, we think a lot about risk and what can go wrong. And, this is a whole new business and people are skeptical. Tell us some of the main risks that Zillow actually is exposed to here.
One of the primary risks to the iBuying model are a housing market downturn. Another one would be that buying and selling homes is not and likely will never be a high margin business for Zillow, especially in relation to their sort of cost light IMT business. But I think there are a few mitigating factors. The first one being that Zillow can adjust their offer pricing mechanisms to reflect the greater uncertainty in the market. This sort of resembles wider bid-ask spreads in financial markets. They can slow down or shut down their operations, as they did in the earlier stages of the pandemic. And I think most importantly, iBuying is a huge synergy to the core business because of the fact that it places Zillow closer to the homeowner, which increases the company's long-term utility and staying power in the market.
So the Davis Rea Investment team has done this deep dive on Zillow. We've gotten all sorts of great insight the last 15, 20 minutes here. Now it's time for the magic question. Is this the kind of disruptive company you want to own now for your clients? If not, why not? And if so, maybe down the road, what price looks right?
I think it's definitely the kind of company that we want to own. It has all the right attributes. It's a data science business. It's disrupting an old industry that touches a lot of people. It's a major transaction. There's a lot of money. There's a lot of fees. They're early stage. It's a huge, huge market. They're highly skilled employees. They're all former Microsoft people. They're the ones that started Expedia, that disrupted the travel business. So these people are serious operators. It's not, a bunch of kids in a room thinking stuff up. This was designed 20 years ago within Microsoft's think tank. So I think it's got all the right attributes: management, disruptive technology, old industry, lots of barriers to entry, and they're knocking them down one by one. The price, if you go back to 2018, 2019, Zillow was trading at around $60 to $70 a share. It's around $100 a share right now,
right?
Down from 200 or so.
Mm-hmm.
We know a lot more about their business plans. They've actually executed. They did very, very well during the pandemic, proving that the iBuying business actually works. So I think you give them a premium over that $70 price. Things have gotten pretty heady here. We think the stock is probably a buy here right now, but we want to keep an eye on a little bit longer, a couple more quarters of how the markets are reacting to the rollout of their experiences. I think if you get the stock in the $80 to $90 area, probably a little bit closer to 80, I think it's a really solid long-term buy. I would not pay attention to the day-to-day or even the monthly swings. This is a long term story, and I think it's really exciting opportunity and really bears paying a lot of attention to. And we're definitely, it's on our list of things to buy at some point.
All right, great stuff, John. Thanks for the peek behind the curtain. And thanks, Matt. And thanks, JC. We'll see you next time. Thanks for joining us. We'll talk to you soon.